This meeting is being live streamed. Got it. All right. Are we live? There we go. We're live on YouTube. I am hearing talk back from myself. That's interesting. Hey, all our YouTube friends. I got to mute myself here so I don't hear my own self talking. All right, there we go. Chris, that's going to mean I won't be able to hear you if you're talking to me. So you're going to have to resort to text. We're going to have to figure out here how to not have YouTube talking back to me. Hold on. I can just turn off the volume there. All right, I think I got YouTube muted. Awesome, awesome, awesome. Okay, for those that's joining the live stream on YouTube, we're gonna start right at the top of the hour. I think you're just a couple seconds delayed. And we're going to put this up. Let's get a little countdown going here. Maybe. We are gonna start in, what do we have? We have exactly 1 minute. It'll be starting in a minute here. If you're on the YouTube, leave a comment and let us know what you guys think. It's been a hot minute since we've been on YouTube with y'all. We've got some plans to rejuvenate that channel. Amazingly, there's almost 11,000, 10,000 subscribers on YouTube. So the content is very popular there. It's just not been updated very recently. So I think it's probably time to update some content on YouTube. What do you guys think? All right, I'm committed to having this countdown start in exactly 1 minute so that we can count it down. Now on my Zoom side of things, let me get my chat up. If you're here in Zoom, I can see your questions and encourage you to put them in. Close down my video because I don't need to be looking at a picture myself. There we go. All right. We'll kick things off here in just about 30 seconds. I'm glad you guys are here today. Oops, didn't mean to do that. Participants, Dave. All right, good attendance here live. I assume there's good attendance going on the Facebook sphere. Welcome for those of you guys that are joining us, whether it be here in Zoom or whether it be on I said Facebook, I meant YouTube. So for those that are joining on YouTube, what this is a group coaching session for our students that are progressing through the foundations of trading stocks and ETFs. So every Tuesday, there is a training session that happens and they're divided into different levels. And then every Thursday, we get together and we have a group coaching call where we answer questions, we do live examples, we place live trades, and just kind of build upon what we've learned from the previous Tuesday. So this is that, and we wanted you to get a little taste of this on YouTube. We're not planning on going live every week on YouTube, but every now and then we may sprinkle a few of these out just to make sure the content stays fresh. So keep your eyes posted. I guess what they say is hit the subscribe button and like us so that you get notifications. I don't know, I'm not a YouTuber. Since we do have people from several different parts of the world, we do need to read this disclaimer that the training is for educational purposes only. All examples and analysis are intended for these purposes and should not be considered as specific investment or trading advice. We may look at trades from time to time. Today, we've got a lot of stuff to go through, so I don't know how many trades we'll get into. I just want to make sure we're perfectly clear that in a free 15-minute YouTube video, you're not going to duplicate 25 years of results that I have or that our instructors have. So let's just make sure we're all on the same page. Any results that we do share should not be considered typical. Now, it's an orientation, because this is the first time we kind of have everybody together. I want to just point out where each group is at in their cycle. So we have a cycle 1 group that is in here. And on Tuesday, you went through the content, how to make money trading, and we worked through the ultimate trading formula. And sort of the big takeaway from that is the framework that you're going to be using to learn how to make money trading. And then we jumped into some of the tools that you're going to use and went over some of the basic charts. That's where I'm going to focus our attention on in group coaching, making sure that you're very comfortable with your charting application. Our cycle 2 students that are in here, we went over the 4 levers of profitability and started talking about the different ways you can start thinking through your trading plans to set yourself up for success. And then we did a little introduction into the stock chart. And that's where we're going to focus those conversations. So more specifically, what I'd like to talk about is going over the different components that are in TradingView. It can look like a lot when you first join, kind of like the chalkboard on the screen here. But if we break it down into its individual elements, it's really not a lot. And I encourage you to get in there and just start clicking around. You really can't hurt it. And if you do hurt TradingView, there's a button to hit reset and it'll put it back to all the defaults and you can start clicking buttons again. And then for our cycle 2 students, I'm opening this up to and ask me anything about my trading plans or strategy or anything regarding the 4 levers of profitability. I gave you a lot of that content, kind of let you peek into what my personal rules are for the way I trade. So much of that's probably been answered, but if you had some questions that we didn't get to in class on Tuesday, I'm happy to answer those now, or even branch beyond what we talked about in class. And then if we've got any time remaining, which I don't know that we will today, but I'm always happy to take a look at a stock that you guys are interested in. We'll work up an analysis on it. And if appropriate, maybe we'll place that trade in the TSU trading account as well. Here is what I'd like to look at in TradingView. Now, I get nothing out of TradingView. There's no revenue sharing, whatever. I just like their platform. And so I talk about it a lot. I'm probably their best fan for TradingView with the number of students that we've introduced this to here at TSU. I love the fact that it's online. I can pull it up on my iPad. It looks beautiful. I can pull it up on my Macintosh computer. It looks beautiful. It's just a great looking charting application. I like it even better than Thinkorswim, which I've been working with recently as well. If you use a TradeStation, they've got very powerful charting as well. And I understand if you want to stick with that. But since I use TradingView, that's what I'm comfortable with. And that's what we're going to talk through. So today, let's take a look at line and candlestick charts. I'll show you where to change those. We can take a look at some candlestick settings. There's an interesting setting in there called colors based on previous close. I want to point that out because it can give you different information if you're not aware of what you're looking at. We can talk about creating settings templates in TradingView, the dark theme. A lot of you guys like that. I personally use the light theme for a few reasons. One, that's what I learned on. Number two, we're always taking screenshots for publications, and we try to save your printer toner cartridges so that it's not just printing out black charts all the time. So I get used to working in the light theme, but I know a lot of you like the dark theme, so I'll show you how to switch that over. Some of the tools I use, how to find the stock, the watch list alerts, paper trading, the screener, putting up multiple charts on your screen, and a brief discussion about data. Data is where a lot of people get confused because there's free data, there's premium data, there's streaming data, there's level 2 quotes, and we'll talk about that so you know exactly what you're getting. For my people who are here live in Zoom, put your questions in the Q&A pane, the chit chat in the chat pane, and just generally be nice to everybody. Turn your phones over, turn off social media. We're going to spend about 45 minutes working together on our trading skills. So let's jump into it here. Oh, I did put this in here. I want to remind myself. I'm going to put this in the chat pane. If you're on YouTube, just, there's the link. If you, for some reason, did not hear about the training, cycle 1 just started Tuesday, 2 days ago. And it's not too late to get involved. It's free. There's no charge for it. We'd love to have you in there. And if you need a little makeup video, we've even got one of those. It's about 10 minutes long, and you can watch that video and you're going to be totally ready for class 2 this coming Tuesday. So let me put this in the chat pane here for our Zoom students. There you guys go. If you guys want to jump back into level 1, you can do that as well. Okay. I need to keep this up so I don't forget my notes and where we're going. But here's TradingView. And this is kind of my typical view that I'm looking at here. I like the light charts. And, if you prefer dark charts, that's okay. You change that setting up here in the upper left-hand corner. where there's a 10, that just means they've had 10 releases. Tell me 10 things that's new. And you can switch it right here to the dark color theme. I'm not going to do that quite yet because it changes all of my settings and I don't want to have to go back and reset everything. So we'll show you at the end what that looks like and then how you can set up a template for each one if you want to go back and forth. Now, we talked on Tuesday about the difference between a line chart and a candlestick chart. And let's come to a screen that's not got quite as much stuff on it here. This is the S&P 500 that we're looking at right now. And you can toggle between these two right here. I'm on a candlestick chart right now. If I click that line, it'll flip over to a line chart. If you hover over the line and double click it, you can actually bring up settings on what that line looks like. So here you can see it says line. Click that. We can make that a thicker line and a blue line if we want to, or whatever. If you like orange or black, make it a solid black line. That looks pretty good to me. I need to actually save that in my template so that it goes back to that. Anytime I move away and come back, it resets that to the skinny line. But since I'm typically in candlestick charts, it's kind of a non-issue for me. So there's a good looking line chart. If we want to go back to the candlestick chart, just right up here in the upper left-hand corner, we can flip back to a candlestick chart. Now, if you hit the drop down, you'll see all kinds of charting options that are in here. The bar chart is interesting, and that's worth possibly taking a look at. This was the older brother to candlestick charts, and their design is the same. We're just missing the candlestick body. So let's go with current events right here. You can see that that current bar that's on the right-hand side is constructed. There's a little hash on the left-hand side, then there's the bar, and then there's a hash right about there. I'm looking at this candlestick. What that means is we opened right there. The high is represented by that we call it a wick in candlesticks. I guess it's the bar of the bar. And then there's a little right hash, and this is where we've closed current events. So if we were to turn this into a candlestick, it should look something like this on the candlestick chart. Let's take a peek. And there it looks like that. So we opened, we dropped, we went a little bit low, we've come back up a smidgen. So that's a bar versus a candlestick chart. Same information, just this is hard to read in my opinion. And this is even color coded green and red, which is a little bit easier. But when these are all black, which is what they typically are, this is how I grew up learning to trade. That's what we were looking at. Chris Burgess is in here. He's another instructor of ours. He's probably too young to even remember when these bar charts were popular. You just kind of looked at them and went cross-eyed and said, okay. So when candlesticks came along, introduced by Steve Nissen, it just made it so much easier to read these charts. Now, others that are in here, which are interesting, the area chart, I mean, I think that's interesting if you don't know anything about the stock market, but nobody uses an area chart in legitimate analysis. I don't actually know what baseline is. No idea what that is. Ike-Nashi is interesting. This is not a candlestick chart. It's based on, there's a time component and a price component. And my understanding, I haven't worked with them in probably 5 years, but I think that price action had to move a certain amount before it like triggered the next candle. So it looks a lot more blocky. And I did have a private coaching student once that developed an entire system of trading around this Ike-Nashi candle. He might even be in here. Henry was his name. And it was very successful for him. It worked very, very well. I just never got into the whole Ike-Nashi craze. So these are older style charts. Renko is the same idea. Actually, Renko may have been what I was thinking about, where it has a blocky price movement. Another one that's popular, but nobody actually uses is called point and figure. This is a bunch of X's and O's. And it used to be popular back in the 90s. I haven't seen anybody talking about point and figure in the last decade, but there's some interesting ways of breaking down stock market data. And at the end of the day, the charts that are going to serve you the most are the line chart and the candlestick charts. Now you can see these have little yellow stars next to them. And that's the way in TradingView that they designate a favorite for anything. So if I were to hover over hollow candles here, I could add that as a favorite and it's going to pop up here. Now, I don't know why, probably because that's the chart that we're on. So I don't know why that, yeah. If I reload this page, it'll probably get rid of point and figure. No, it keeps it up there. I'm gonna have to be looking at bar charts here for a while. But typically it just puts your favorites in here. And I think what's happening is it's not saving the chart. Let me try just actually, let me save this chart. Now, if I reload this page, it should get rid of it. Yep, it did. So that's a good tip there as well. If you click right here, it doesn't look like a button, but it kind of behaves like one. It will save that chart setting, and you can actually automate that as well. See, auto save is on, but every 3 minutes. So it had saved whatever we did 3 minutes ago, which apparently was the bar chart, which when I reloaded the page is why it brought it back. So anytime I come back to TradingView now, it always gives me the last saved page. Or if you want to force the save, you can just click that button, and that check mark in the cloud is telling me that it's currently saved. So candlestick charts, the line chart, and then this hollow candle chart is interesting. I don't want to keep that as a favorite, but we'll talk about that in just a second. Hey, good to see you, Sorties, David, everybody else that's here in the Zoom. I see you all chatting away in there. Moving on to the candlestick settings. This is how I set mine up. Again, if you come and click on a candlestick, or double click on a candlestick, I should say, you have an opportunity to show the body, the borders, and the wick. So just so we can see here, if I turn off the body, you see how they all become like little ghost candles. The body is the guts of it. The border is what's around it. And then the wick is the part that goes up and down. As you guys work with me, you'll find out that I'm a little bit of a graphics nerd. I like things to look good. So for me, I don't come to straight black. I come 2 over. And that's my setting for actually 3 over is, I said that badly, 1, 2, 3, the 4th box over is what I set my colors at. And the reason I do that is it's a little bit easier on the eyes. If you have solid black on a solid white screen, it's just a lot of contrast for your eyes. So if you like the way that my charts look and you want to model it, that's your black right there. I use black for the down candles and white for the up candles. I do that because that's how I learned candlesticks. Now, a lot of people, and I think even by default, it sets it up to look like this. Green candles mean up and red candles mean down. To me, all of these candles actually look the same, and they look like bearish candles. They look like they're all filled in candles. That's just the way that I learned. But if you feel better with green and red candles, more power to you. I am going to show you a little interesting tip here in just a second that does add colors back into the candles, but does not make them all solid, or as I see them as solid. Now you can also see there's a border around the candle. It's black. If you were going to change these, you may want to also change your borders to match them. Black, green and red, so that way they're not quite so so outliney. I don't know what to call it. You can even lighten them up a little bit, play around with it. You want your charts to look good, and it sounds like a trivial thing to say, but we spend so much of our time when we're working as stock traders in your charts that it's just hard to look at messy charts. So make your charts look good. I'm going to come back to my candlestick bodies are white for up candles. They are 4th from black for down candles, and my borders match them. So 1, 2, 3, 4. Both of my borders are black. 1, 2, 3, 4. There you go. So that's how I get those black and white candles. The wicks as well, you could set them for an up wick or down wick. I make all of my wicks black. This is probably good for here. If you like how things are coming together, you may want to click down here where it says template and save this as a new template. Now you can see I've got a black and white template that's saved here. So if I were to click that, it would snap back to black and white. So let's do this. Make this red, make this green. Okay, and you're like, oh man, that looks terrible. Come back to black and white, boom. There's my template back. I actually don't remember what my colored is. Oh, that's for the dark theme. Well, let's go to the dark theme. So if you did like the dark theme, We can click dark color theme. It's going to ask me, do you want to change all of your templates? I'm going to say yes. Okay, and there's the dark theme. That looks a lot like charting platforms and brokerage platforms that you're already familiar with. Then I could actually come in here, see if I've got my template saved. There you go. So for me, again, hollow candlestick bodies for the up candles, solid candlestick bodies for the down candles. And that's a preference thing. We could actually even lighten up that background, that watermark there if you wanted to. So we're going to double click on the screen, or right click if you're a PC user, but Macintosh, 2 fingers, click, settings, appearance, right there, watermark, and we can lighten this opacity down here to even less, say 10%. Now that watermark is even lighter, or maybe even a smidgen more. Appearance, watermark, make it 5%. There you go. See how that's nicely in the background? We could even do the same with these lines that are going up and down. Settings, appearance, vertical grid lines. Can make them 4%. Horizontal grid lines, make them a 4% opacity as well. So that kind of lightens everything up, and your candlesticks are on display. I'm going to go back to my regular color scheme that I like. But see, now my candlesticks are all red and whatnot, just sad. So again, right click, settings, template. Now we save that template, so I can just click on black and white, and boom, I'm back to the kind of charts that I like to see. Yes, charts are like cars. They need to look good if you want people looking at them all day long. That's right. Yes. So we've gone through line candlestick settings, colors based on previous close. So let me show you an interesting thing in here. By the way, hollow candles may be by default. I think they finally added that. That's a new setting in the last couple of years. I think that is, yes, actually, this is exactly where we're going. So you can either click on hollow candles, or there's a way to do it in the regular candlestick. I'll show you on hollow candles, and then I'll show you a secondary way we can do this. So check out this candlestick right here. You notice anything weird about that? 10 bonus points to the first person who sees that. What's weird? Oh, no watermark. Yeah, I'll fix that. Well, you guys are writing in the weirdness. I think this was 15%. Yeah, there we go. Yeah, it's bearish, but it's not. It's green. How does that work? So this is a solid candlestick that's colored green. And what it's doing is it's coloring the candlestick based on the previous day's close, but it's filling the candlestick based on the open and close. So this candlestick actually opened here, it traded down, or closed down, and then it had a little wick on the day. But notice that close is just a little bit higher than the previous day's close, so it's colored it green. So if you were looking up here, in fact, we can do this. Keep an eye up here when I hover over it. See how it says it went up $2 or 0.06%. It closed higher on the day or on the session than it was the previous session, but actually the open, which is 4659, is higher than the close, 4658. So it closed down for the session, but up day over day. Interesting, isn't it? So the inverse happens with our red candlesticks as well. Let's find one of those examples. Here's one right here. Well, the circle is better. So this opened, it traded down, it came back up, and then it actually closed higher for the day, or higher, yeah, higher for that session. But it's a red candlestick because the previous day's close was higher than that close. This chart I can get behind. I don't dislike that. That's not my default. I mean, I feel like I can look at it and see, okay, we closed higher than the previous day or whatever, but it makes a lot of sense to me. And it actually gives you additional information as opposed to just coloring your candlesticks solid red and solid green. So again, that's called a hollow candlestick in TradingView. You can also force it by going to our regular candlesticks. Again, double click on them and right up here, colors based on previous close. If we select that, that should have updated, but it didn't change anything. I wonder if it's because I'm all black and white. It's probably a moot point that we don't need to major on. I don't know. I might have to deselect. Some people are writing in. They probably have the answer already. No, I don't know why. Just somebody write in. Nope, not sure. I guess it's a moot point. Oh yeah. There it is. So watch this candlestick right here. That was the one we were looking at before. If I turn this on, it changes the color based on close. That would actually be very confusing to me. I would not turn that on. Use the hollow candlesticks. I should reset my chart up. Yeah, the hollow candlesticks just do that by default. You don't even have an option. So, and if you royally screw everything up, come down here and click apply defaults. Let's see what the defaults are. There you go. By default, this is what the chart looks like. Solid green and solid red candles. Okay. Any questions on candlesticks before we move on? Go back to black and white here. Yep. Hollow candlesticks make trends easier to view. I think they make everything easier to view. Okay, so coming back to our order of events, we've done We've done lion versus candlesticks. We've done candlestick settings, colors based on previous close. We've shown you how to create a template. That's the settings and template, and you can save your template as. We went through the dark theme. Favoriting tools. I showed you this briefly, but let me show you again a different thing. Right down here in the lower left-hand corner, you've got a star, and you've got a picture of a freezer full. That's hilarious. You got a star. If you click that star, you bring up your favorites toolbar. The way things get into this favorites toolbar is by coming over here to the main toolbar, and we can open it by clicking the little caret on the right-hand side. See that? And selecting the yellow star next to any tool that we like to use. Now, I'm always using a Fibonacci retracement, so that's a favorite. I'm using a trend-based fib extension, that's a favorite. I'm using time-based fib analysis, that's a favorite. Maybe you want to use a Fibonacci circle. I have a standing bet for $100, by the way, for anybody that can show me a meaningful way to use a Fibonacci circle. We've had that bet now for like 5 years and nobody's been able to do it. I think it's a stupid tool, but anyway, that still stands because it's bogus. Like what, I don't get it. You want to draw a circle on your screen, go for it. And you can add Fibonacci things to it. And I just think it's a dumb tool. But anyway, Fibonacci retracement's not a dumb tool. All right. Other things that you're going to be using a lot. If you want to write text on the screen, there's a text tool. Anchored text just means it anchors it to a point on the chart. Signposts are very popular. I have them favorited in here. So you can see the yellow star, click on my signpost in the favorites toolbox, boom. And then we could put a little signpost right here, which basically just places some text at this point in time. Right, there's our little signpost. So if I use this a lot in teaching, like if I want to remember something for like a power trader or whatever, I'll use signposts there. You might, have a, come on. Here was once the trade of a lifetime, like Oregon Trail style. Whatever you want to put on there. So signposts are interesting. You can look at these tools and play with them. Tweet, I guess I don't do tweeting, so but I guess you could share it on social media. I do use the flags. I use these a lot with fibs, so I have that highlighted. If you click the flag and I can drop it there, that just reminds me where I drew certain measurements from using my Fibonacci analysis tools. So that may be one you want to favorite, but look through and make it your own. Fibonacci circle bet still stands. Rectangles and ellipses I use all the time. Rectangles more so than anything. The ellipses I just use for teaching if I want to highlight something. But the rectangle I actually use for measurements. Speaking of measurements, this tool right here is so valuable. They make it just its own thing. It doesn't even have a category. But if you want to click that and say, well, how far has the S&P pulled back? Then it gives you a lot of information here. We've come down 9.5% or 4,000, 45,000. That's not right. Is that right? 45. Why does it say 45,000? Maybe that's the low. Anyway, 19 bars, 28 days count. So bars versus days is bars on the chart versus calendar days, what the volume has been over that period of time. So lots of interesting information there if you use that measuring tool. I use that sometimes for calculating R values when I'm getting ready to do position sizing. I'll use that little tape measure tool there. Let me catch a couple questions here. What does it mean when you have those super long wicks on the candle? So that means there was a major battle going on between the bulls and the bears. And actually, we talked about this in class 1. Let me see if I have that here. Do I still have that pulled up? Class 1. Here we go. So Johnny's in level 2 right now, but let me just share this with you guys. Remember this from class 1 we did. This is the benefit of a line chart versus a candlestick chart. On a line chart, it's as though a radio announcer while you're driving home says, the Dow Jones Industrial Average had another tough day today, losing 157 points after so-and-so said this and that to whatchamacallit, right? And if you're listening to that on the radio, you're like, what's happening to the Dow? But if you're looking at a candlestick chart, you see, demand was strong midday, and the buyers drove the price up over 350 points from the low of today's session. So there's kind of an example, maybe not as exaggerated, Johnny, but an example of what you were asking about. And what happened? That momentum continued on. So this is actually a chart pattern. And for those of you that are in cycle 2, or I think we're going to start calling it level 2, because I guess cycle confused people. Those of you who are in level 2 right now, in 2 more classes, we're going to talk about these candlestick patterns, because you could 100% see that the buyers were coming in right here and building up momentum, and it drove the price higher. Now let's come back to current events on the chart. Can you see the difference? So the radio announcers, let's come to the Dow. Let's just go to the ETF. Well, Dow Jones Industrial Average, there we go. So on this day right here, the radio announcer would have said Dow Jones Industrial Average gained 99 points today. But if you were actually looking at this, the low of this session was, if I can hover over it, that low was 33,150 and the close was 34,364. So that's a 700-point gain. Here's where we can use our little measuring tool. That move, not 700, 1,200, is that right? 1,225 points between the low of this candlestick, whatever day that was. My Zoom controls are in the way. January 24th. 1,200 points. So you got the radio announcer, Dow Jones Industrial Average gain 99 points today, where the retail traders were saying, or the technical analysts are saying, holy cow, that was a 1,200-point swing from the bottom of that move. And of course, the resultant move was the Dow continued higher. Now we've got all kinds of other things going on in here, and this is just a volatile time that we're in right now. So more on that to come here as we get into chart patterns and whatnot. But that's what that lower wick means, Johnny. That means that at one point, this candlestick actually looked like this. We opened at the bottom of that white candlestick and we traded down, which in the face of 3 or 4, 5, 6 previous down days on the Dow, this was looking pretty scary here. But the buyers came in and shot price action back up. Good question. Does it have anything to do with buying or selling pressure on that candle? Yeah, 100%. There's a lot of buying pressure that came in. Another way you could articulate that is this was a demand zone. And let's zoom out and see why. Remember, we haven't got here in level 1 yet, but you guys are going to. We talked about how price has memory, right? So we've kind of got down into this 33,000 world before, 33.2, and it seems to be that the buyers have decided to buy it up, or even a little bit higher up here. Buying pressure starts coming in and driving the Dow back up. So that's exactly what that means. Good call. Okay, coming back to, so we've gone over favoriting tools. Finding a stock. This is easy peasy. There's 2 ways to do it. So you just click on the main screen in TradingView to make sure that that's the active window. And then you just start typing. So I can type in Jets, check out one of my trades while I'm in here. We're improving a little bit today. I'm in a bearish trade on Jets. Needing this thing to go down a little bit more aggressively if it would. Or if we wanted to go check in on another trade, Rocket, RKT. Rocket, we're in a bullish trade on. It's gaining, it's doing well. Kind of the sweet spot is if it would get up here to about 1350, that would be very good for that trade. Another way you can look up a ticker is to come up here in the upper left-hand corner where it says symbol search and just click that, and then it brings up that the symbol search menu. So we can come back here to SPY, which is the ETF on the S&P 500. We'll be learning about ETFs in level 1 here shortly. Okay, now that you know how to navigate between candlesticks and lines, you know how to favorite some things, you've learned a little bit about themes, you've learned how to find the stock. Let's talk about adding those stocks to a watch list. There's a lot of ways you can do this. The most basic way is to come up here. It's on the upper right-hand corner. Open up this side menu, and here's a watch list. So this is Power Trader. I taught last weekend. This was a list of stocks that I was interested in reviewing in Power Trader. So what I did was I created this list, and then here's the plus button, and we could put in, we could put Rocket in there because it's not in there yet. Boom, we click to add it, and Rocket is in there. And you can go through and do that one by one. Another thing you can do is flag stocks and keep track of them that way. So if we had a stock screener, and I'll show you how to use this here in just a second, and we're going through it, let me make this a little bit larger. You're like, okay, I want to take a look at Walmart. I want to take a look at Texas Instruments. I want to take a look at Waste Management. You can see how I'm flagging those here, and there's even different color choices for the flags. Okay, you can create a watch list that's just based on that color of a flag. No, I don't necessarily need to, and actually the ones that are in here are old. I should use that more than I do. It's a very useful tool. I just don't for some reason. So I don't know why that is about me. In fact, it looks like this stock is not even in existence anymore. It's been a hot minute. All right. So there's 2 ways you can add to a watch list. The other thing you can do is if you're looking at a stock right here and you want to add to a watch list, you right click on the chart and you can hover over add Apple to a watch list, and then it'll let you select which watch list you want to add it to. So on a PC, right click, on a Mac, 2-finger click, and you can add it to a watch list. While I'm in here, you can also add alerts. This wasn't on our, actually, no, it is on our thing. That's the next thing to do. We can add an alert to Apple. And one way is you can just put the alert on the screen and then move it around either by changing the price in here. You can move it up. Say I want it to go up to, like, tell me if Apple's going to break down below 169. So this is going to give me an alert anytime Apple is crossing the value of 169. You can also have it if it was crossing up or if it's ever greater than, if it's outside of a channel, which I don't know if that's, okay, so you actually articulate what that channel is. If it goes up a certain percentage, you know, if it gaps up or whatever, you can add all those in there. Then you can set the message that you want it to send you. It will send you on the app in a pop-up. If you're on the online version like we are right now, it'll send you an email, webhooks for my ultra nerds that are out there. That's an API. And then you can have it play a sound. It actually will send you a text, I thought. Yeah, there it is. Send email to SMS. So I guess it sends you whatever it was going to email. It'll also send it to you as a text message as well. Now, another way you can add an alert is by clicking this plus button over here. So let's say we wanted to get notified if Apple's breaking out to a new high. I'm just going to hover over, click that plus button, add an alert. You can also set an action in here. I want to buy shares or not. That's a little beyond the scope of where we're at right now. But I just click that plus button, click add an alert, and there's an alert that's in there. If you want to keep track of the alerts you have open, that's the little clock over here. Click that, and you can see this alert is active on Apple. Now, all the rest of these are old alerts I have. I should go in there and X them out. Some of you guys that have been around for a while, you'll see my screen pops up with an alert every now and then. That ticker symbol tick is crossing up or crossing down. This is that alert. It's a ongoing continuous alert, and it just notifies me if there is a certain percentage of the market that is moving up or moving down. And there's a little strategy that you can deploy, especially if that happens midday, right in the middle of the day. There's a strategy. It's a counter fade strategy that can be triggered off from that. I also like it because it kind of alerts me that there's big momentum moving in the market one way or another. And so I keep it on there, even though sometimes it's a little bit annoying. So we can come in here. I could pause this alert if I wanted to, or I can just delete this alert if we wanted to, which I think I'll do because we don't need that in there right now. All right. Any questions so far? Let me pause and see if there's questions. Oh, it's not that I don't understand how that Fibonacci circle tool works. I understand it. I mean, I consider myself to be a Fibonacci expert, humbly speaking, and I can't find I've tried, trust me, I want to make it work, but it just doesn't work. All right. Looks like we're caught up on questions here. Let's talk about paper trading, screeners, multiple charts. If you guys have questions on the trading plan side of things, feel free to write them in. I'm happy to grab some of those. Otherwise, we're going to be at the end of our 45 minutes here before we know it. So paper trading, I got my Zoom controls in the way. Paper trading is down here at the bottom, and it's where it says trading panel. You want to pull that up. Looks like no, I'm not off my screen. There we go. So this is where you can connect your broker if you want. Like if you wanted to connect an OEM to broker as a foreign currency trader, TradeStation is connected. I can't believe they don't have TD Ameritrade in here. That is interesting. I actually thought they had more options in this. Oh, there you go. These are, never heard of those brokers. Easy Markets. I'd be careful with that one. Anyway, you'll notice up here, paper trading is one of these. So you can, I don't know why that disconnects. I've connected this so many, it even has trades in there. Yeah, I was demoing this. So we can do a paper trade. And this is what we were talking about in level 1, where you want to practice with fake money before you do real money. So I need to remember how, I don't use this a lot. How to use paper trading. That would be helpful. I wonder if I just do it up here. Like if we wanted to get into a sell Apple. Yeah. So you click the plus sign. That's how you begin the order. Let's just do it at a market so we get into it. Let's sell short. Fun fact on selling Apple short: my 12-year-old Josiah is going through foundations of trading, and he sold Apple short up here, and he made himself about 150 bucks in 2 days. It was pretty cool. I was proud of him. It was virtual money. He's still virtual trading, but still, he did pretty good. That was his first trade this year. All right, so we'll just take one trade. I don't even know how much money is in this virtual account. Boom, sell it. That should show up here. Yeah. It was a little nerve-wracking because I'm like, I'm trying to remember if I had any real money accounts linked up in TradingView, but I trade directly through the TD Ameritrade platform right now. So there you go. So we're short. It shows this. That stinks. You can't move that. Stop loss is your stop loss. Trailing profit, or take profit is, if you want to close the trade. Reverse position if you just wanted to flip it and take the bullish side of things. So there you go. We'll see if Apple makes us any money. That's how you place a trade in your paper trading. Also down in this area of the screen here is your stock screener. I would say the screener is good, but it's not as robust as some others that are out there. If you're in TradeStation or if you're in Thinkorswim, those screeners have more capabilities. But I use this screener for years. So this is a little stochastic crossing up through 20 screen that I keep saved in here. I have a strategy that's based around that. So if we pull up Walmart and put a stochastic indicator on our screen, Walmart should be crossing up through 20, and it is. And actually, this could be a fun little, this could be a good long trade setup just from a 30,000 foot view. But Walmart is trading sideways. Can you guys see this? The price has really gone nowhere except for that little crash there. And that's not the COVID crash. That was 2021. But this stochastic oscillator crossing up through 20 works like a champ in sideways moving stocks. And so our target would be up here for Walmart. So there you go, Chris. That was a freebie for you. Chris only gives me bad trades. I don't understand why our friendship has come to that, but I'm just kidding. We have a little internal joke about that because we both lost money on a trade last week. I guess we closed it this week. That was Chris's idea, so I pick on him relentlessly now. Even though when we're on our A game, we're still only making 7.5 out of 10 trades that are profitable. So the filters on this one are very simple. Average volume is over 1 million shares, and stochastic, which is the %K line on stochastic, is crossing up through 20. And the reason I like that, for those of you that have gone all the way through level 1, you'll understand this. If you're new to level 1, you're going to get here in class 4. But notice how what's the word? Limited stochastic stays under 20, and this is pretty typical across most stocks. This is the most extended that stochastic has been under the 20 on this particular screen. Typically, and there's another close one there. Typically, it comes down, it pops up, it comes down, it pops up, it comes down, and it pops up. And those pop-ups typically coincide with a rise in price volume. So I don't care so much when it comes down below 20, like, we'll let everybody else sort that out. But when it comes up through 20, I'm telling you, do a case study on this right there. Stochastic crossing up through 20. We did have a little pullback. That's to be expected after a V bottom like this. Like, took off. Here's another one. Took off. Here's another one. Took off. Here's another one. Took off. I mean, go do the study for yourself, but stochastic crossing up through 20, especially in a sideways moving stock or a slowly bullish trending stock, is a very interesting setup. And I like that strategy, which is why I have a scanner set up for it. If you wanted to come in and add other things in here, you could limit it to a certain sector. You could limit it based on, let me see here. This is everything, technical and fundamental. I was using the financial scanner tools to identify stocks that looked like they could be leveraged highly in debt. So if we come here and look at the debt to equity ratio, that gives us a kind of a starting point to see companies that may be a little more leveraged in debt than they should be, because rising interest rates are going to really impact those companies more so than companies that are flush with cash. Cash, when interest is going up, is good. Debt, when interest is going up, unless it's fixed interest, Variable interest is bad, very bad, because your cost of operations go up artificially. Okay, one last thing that I want to make sure we get through multiple charts, then we'll talk about data, and then I'll let you guys go. So the way you bring up multiple charts in TradingView is up here. It just looks like a square, but if you click that, it brings up different chart layouts that you can use. One of the ones that I use a lot for analyzing sectors is this 3x3 or 2x3 layout, I guess, six stocks in there. So I'll show you what that looks like. If I load that chart layout, sector analysis, you can see I've got 6 charts that are on my screen at any given time, and I'm able to kind of see the market as a whole. There's 11 different sectors. So on my first sector layout, I put the S&P 500 in there because that rounds it out to an even 12 stocks, which fills up the screen nicely. And then the second one, load chart layout, sector analysis 2, has the remaining sectors. When you get this the way you like it, so if you wanted to have a, let me actually just pull up a new chart. If you wanted to have, one on top of each other, and you get this, say you want to look at the S&P with the semiconductor index, which if you're unfamiliar with the semis, they are very, very valuable to keep an eye on. Let me get both of these. This is the advantage of having a template too. There you go. The semiconductors are very popular to keep an eye on because they're sort of a bellwether for where the rest of the market could go. This on top is the S&P, and you can see, let me actually sync these up. Let's do a year. This is one thing I don't like about TradingView. I wish they had better sync options on these. Time, interval, symbol. No, not symbol. I didn't mean that. So theoretically, these should sync up now in terms of time. There might just not be. Oh, that's right. So you can see these look very, very similar. The chart patterns, we came up, we came back, we came up, we came back. This is a 5-year, so we're looking at a weekly chart right now, zooming back into a 1-year, but they don't always go exactly the same way. So let me see an example of divergence here. Here's one. So semiconductors started going up where the market was still really going sideways and then ultimately went up. So you could have had an idea that the overall S&P 500 was going to head up because we were watching the semiconductors gain. So if you're trading SPY, ticker symbol SPY, then you would have had a little heads up which direction the winds were blowing in the overall market. So that's how you get multiple layouts. Once you get it the way you like it, you can save this. Let me get rid of that. So you come over here, click the drop down, and then click rename. That's weird. They should change that. Rename actually saves it, and I don't want to do that because it's going to be stuck in there as a test. But if you rename that to, either the way the chart layout is, stacky stack, or you could even name it based on what you're looking at. Like I have the sector overview and it pulls up all those sector ticker symbols with it. And I labeled it sector analysis 1, sector analysis 2. So that's how you do that. Now I'm going to go back to, actually, I think we'll just X out of this. Goodbye. Come back to my main chart. I saved this. That's a single chart. I think I have that saved. Oh, you can't delete these. There you go. Boom. Goodbye. Actually, that may be this chart. I need to double check. It might be actually, oh no, single chart. There you go. So I save this as a single chart, and that's the default. So yeah, let's get rid of that. I should actually make that a favorite. Last thing to talk about, and I want to come over here to my accounts. I don't think I'm going to dox myself for this. Let's go to account and billing. All right. Fun fact, by the way, every year on Black Friday, they do a 50% off special for TradingView. So I just always buy the annual at that. So that's why I have 625 days left. It's like almost a year, but not quite. But I don't want to lose out on the deal. So I guess I could go for almost 2 years. So here's extra data. This is what I have. Take a screenshot of this if you're interested in what I pay for. And they're cheap. I don't know. Let's see the bill. Yeah, so ARCA is $24. Is that a month? 823.21.
They say
That's a
annual
year.
there.
Ah,
So it's $2 a month.
that's very smart that they say annual. There you go. So it's $2 a month. I pay for the whole year. It's worth it. So what these are going to give you, ARCA is the digital version of the New York Stock Exchange. So if you want to use something like, I just literally clicked the same thing again. I'm a dork. If you come here to SPY, so this ETF trades on the digital version of the New York Stock Exchange. You'll see up here in the title, it says ARCA. If you don't pay for that service, you're not going to get pre and post market data. So I was working, this is another setup or another template I have for a strategy. I don't know why it's not populating right now. That's weird. Try again. Hold on. I need to add pre and post market. That's the problem. Settings. I did all this clicking around and I messed up my own trading. Where is it? I don't know that it matters. I'm gonna have to go find pre and post market again. Dang it. I thought it was actually right here. Sorry. I'm gonna have to find that again. But if we had pre and post market turned on, it would show you pre and post market volume, which is some custom coding I have done. Any of you guys that know the morning glory strategy, we've provided that coding to you so you can put it on your chart as well. I actually had a student I got on a call with. Her data was not looking anything like mine. And like literally we got on a Zoom call. I'm looking at her screen. I'm like, yep, that looks nothing like mine. And then I realized she did not have ARCA. Coming back here. She just had the freebie BATS data or whatever it is. And so that was the difference that made the difference there. So if you're going to be trading SPY, you probably want ARCA. The New York Stock Exchange is the physical exchange, also good. That's going to give you, I think, things like the Dow streaming. I don't remember exactly what all comes with what. And then here's the NASDAQ, which you have to have if you want NASDAQ data, the actual NASDAQ ticker, or I think the Qs might trade on the NASDAQ as well. But bottom line is you can see the cost is very minimal. And this is not even TradingView. It's certainly not TradeSmart. This is the actual exchanges that are charging these fees for using their platform. There's a lot of other things you can put on here as well. Let me see how I get to that. Add extra. So if you're an international student, you may want to add things like the European exchanges or the Canadian exchanges on here that are, North America. If you wanted to add the TSX, we have a lot of Canadian students. And if you're trading the Canadian market, you're going to want the Toronto Stock Exchange. So you can add that. It's $11 a month. I don't trade futures. So I'm assuming if you did, though, you'd want to add that futures data stream. Luckily, we play on the side of the tracks that it costs us $2. Very, very cheap. And, if $6 is your cost of admission for trading the stock market, that's a pretty low cost. And it could be. So you don't have to have the fancy TradingView platform. You can deal with their ads. You probably have found them. They pop up here like every freaking 5 seconds. It seems like, bing, here's another ad. Bing, here's get rid of that. Premium TradingView that cost me whatever you saw, $250 a year. and then $2 a month for streaming data, and that's it. If you're in the US, there's no commissions, there's no nothing. That's your cost of owning a stock trading business, which I think is pretty cool. So that's how data works, and it's all data is not created equal. It's better than it used to be, but it's the old adage. I hate to say it, but you get what you pay for. And without confusing people, which I'm about to do if I'm not careful, without confusing people, let's get back to a chart so my eyes can relax. What happens is the trading view, these charting platforms will partner with a broker, and that broker says, okay, we'll agree to share with you the trades that are being placed, so you can get information on the trades that are being placed and the price they're being placed at. But it might just be 10% of the market or 15% of the market that's actually trading. I know, it's like isn't the cost of Apple the cost of Apple? No, like it's different on the different platforms, which is why a lot of people only enter trades with a limit order. So if TradingView has partnered with Schwab and they're like, hey, will you feed us your data in exchange for us connecting to your platform? Schwab's like, okay, we think that's a good deal. Here's the data. The problem is you're not actually getting that data from the exchange, where the exchange sees all the trades going on. You're just seeing the Schwab trades. Problem is they don't tell you it's just the Schwab trades. It's called something like BATS data or whatever. And BATS is a company that they specialized in providing free data. So that's why data can get very confusing, but just don't let it get confusing. I encourage you to splurge on the $2 for, if you could get just one, get the ARCA data, and it's going to cover the majority of what you need. To see pretty much today, then click EXT at the bottom. So click change to the intraday chart, okay, and click EXT at the bottom. Where do you see that? Show E. What if I just push E? Nope, that brings up a stock. Session. There we go. Extended trading hours. Boom, done. It's a booger to find. There you go. So this pre and post market volume, that's the benefit of having the ARCA data. And you can see up here it says ARCA. There's other interesting data things I could show you, but I don't want to really confuse you guys. So there we go. Josh, when you set your entry and your target, how do you determine the time frame for the price action to reach your target? Do you always assume 2 to 4 weeks, whether it's a stock or an option? The long answer to that is I would do, if I was really concerned about time, I would do Fibonacci time extensions. The short answer to that is I buy myself 4 weeks more time than I think it's going to be worth in an option and hope for the best. Or if it's a stock trade, there's no time limit to it. And so then let's go back to that Walmart trade. I just start using the power of observation. So let's go to, there we go, I'm trying to get back. So like, and this actually may be a little bit more of a downtrend than I realized. So hopefully everybody didn't run out and buy Walmart shares. But it looks like these swings are kind of taking about 2 to 3 weeks. So this is that's almost a month right there, you know. So somewhere between 3 and 4 weeks that swing took. This one only took 1 week. This one took, looks like, a month and a half maybe. So if I was going to buy an option on this, I'd probably be looking at April options. This one is, oh, that's only 22 bars, 30 trading days, or 30 calendar days. So the long answer is Fibonacci time extensions. The short answer is the power of observation. You could do a hybrid of that by using my box tool. Let's find another one. Let's see here. Let's do, I'm trying to think what stocks have been channeling. Boeing. Boeing's been channeling down. So if we were to do a quick analysis on this, that's exciting. That's your registration link. I think we can go back and put that in the YouTube comments if you guys are interested. So this sounds like such a sketch answer, but it's the way that I do it. You know, about there is where I think the time is going to be. And it's uncomfortable to some people that are very analytical and they want to have a measurement tool. But if you're visual, that makes all the sense in the world. Like, well, yeah, of course, you know, it took about that long, that took about that long. And well, this one's probably going to take about that long, and maybe add 10 or 15% for good measure if you're trading an option, or add a month for good measure if you're trading an option, just to make sure that things don't go bump into the night. So we could get into, this is what a Fibonacci time-based extension would look like. We could say, you know, there's that, and then we're gonna, wow, this is super tight. Let me clean this up a little bit. Let's just leave this one. Okay, so there's some basic Fibonacci time extensions, and you could start extrapolating from that. And this is just super down and dirty. It would take us probably 10 minutes really to get to where, not that long, 5 minutes, where there's a comfortable projection. So if I really wanted to know time, that would be my mechanism. Do you have any other time strategies, Chris, that you do?
Well, again, it kind of depends on your strategy, right? Like if you're trading stocks, then it just doesn't matter.
Right.
But if you're trading something that expires like options, then yeah, it is really important to figure out how much time the trade's going to take. Generally, yeah, I kind of just eyeball it like you do, right? Like generally see how long the swings have been taking for it to move as far as you think it's going to move. And then add more time, right? Like whether you add 4 weeks, I tend to add like 50% ish, depending on, you know, how long the trade is. And then, yeah, like David just said too, the last thing I look at is the volatility, right? Like you can look at the ATR and just see like, well, how much does it move on average? And then, okay, well, how much, you know, if it moves $2 per day on average, and I think it's going to move $10, well, then it's going to take at least 5 days, right? And then I usually add another 50% on top of that. So, yeah.
ATR is a good indicator. That's one that we don't teach a lot that I actually do like and I do use. We should add this in here. ATR stands for average true range, and it was created by a guy named Wells Wilder. It's very, very powerful information. You can use this for stop placement. I'd never thought about using it for like a time targeting, but y'all are right. I mean, so this is averaging $7 moves per day, Boeing here, or on a per 14 days. And is that right? Yeah. So, you know, if your target is $14, then theoretically it's going to take 28 days to get there if it goes perfectly in your favor. Is that kind of how you use that tool?
Yeah, kind of. So you just divide like how big your total move is divided by how much it's moving on average on per day. But then, you know, that's only if it moves the average amount every
Yeah,
day in the exact same direction, right?
in
So
your
that's why
favor. Yeah.
I multiply it by at least 50%, like, you know, 1.5 to 2 times that, because nothing moves in a straight line. And if it hits that sooner, then cool, you've got more time value left in your options. But yeah, you have to plan on it taking longer than that, right?
Yeah. Interesting. Interesting. Yeah, I need to think about that. That's a good tip. See, always a student. What else here live? Let me see if I can get to YouTube and just see, I don't know where that went. There we go, YouTube. Hey, Ray, are you still in here? Oh, can the presenter turn off his camera? Is that distracting? I can. Maybe Ray just doesn't look like the way I look. Oh, Chris was in there too. Cool. Let me see if there's any questions in here that I missed. Did you see any, Chris, that I need to catch? Lots of old friends.
I've been doing my best to jump back and forth in Zoom and YouTube, but
Sean
I probably
says,
missed a couple.
John says TSU back from the dead. I don't think we're ever dead, but we did kind of tune out on YouTube. But apparently that's where all the cool kids are hanging out these days. All right, I don't see any other questions in there. Great. Good. All right, guys, we're a little bit over our 45-minute mark, but I think that it was valuable time spent together. Thank you all for joining. Those who came via YouTube, that was kind of a fun experiment for us. Our desire is to be doing additional YouTube content. So I'm not going to promise that we're posting every single week or certainly not every day, but we do have a lot of ideas for content that you're going to be receiving here. And so keep your eyes posted on YouTube. And for our group coaching friends, we'll be back here next Thursday for group coaching again. We will be getting into actually placing some trades. Maybe even next week we can do that. But today I wanted to make sure we did this orientation for those that are new. If you need to get into the foundations training, remember it's free for the first level, which is 5 sessions that we have together. We'd love to have you. If you need that link, we'll put it in the comments section in YouTube, or feel free to email us info@tradesmartu.com. Blessings, guys. I hope you put fat stacks of cash in your jeans, because I believe with all my heart, when good people have more money, they're able to do even more good things. Have a great day. We'll